Good evening, and what a day. We're going to take a look at the market here, and then we're going to look at probably several stocks that came up on the bear zone. I'm not sure. I hadn't even looked at the list yet. I don't exactly trade off that list. That's more for a longer term. And we'll see what we got there. Okay, let's digest this market action. I mentioned yesterday that I wouldn't be surprised if we didn't go back and visit the 50-day. Of course, we took it out cleanly, and we didn't gap down below it like I actually said it was possible today. And we're going to just look at the SPY and the SP500. SP500 is my favorite. That's the SPY. And this trend line, we go ahead and get off the chart. This is a trend line we had in place across the, I believe, all weekly chart. I probably drew this on, coming back up to where we had hit there on the SP500. I believe I got two drawn on there. Yes, SP500. I drew this, just picked a spot back here as a reference. That first day we sold off, and drew the line off that low. And then when we ran back up to the 50, if you guys were watching, I predicted we were probably going to go back down here. If we didn't hold here, we were probably going down to this little pink line and the 200-day, and we did all of the above. Now we bounced back up. We got a full Fibonacci retracement, 61.8 up in this range here. And yesterday or day before, we were breaking out pretty good. Then we had this day yesterday. I mentioned it looked like we were headed back to visit the 50. As I watched the market this morning, I'm going to go to the DIA. This is just an ETF like the SPY on the Dow. And I watched these through the day, kind of seeing what the market sentiment is, especially since the market's been moving so much. And using our little setups that I actually showed you one yesterday on an AbbVie, where it was coming down and it revisited and then it broke down. If you remember in the video, I talked about that it was in my red zone below my pivot area, but it had not confirmed the trade, which many times would lead to a retracement back up before it actually went red zone to the short side, and showed how it did that on the chart. I'll just bring this in here real quick. It was like I'm on a 15-minute chart. Get on a 10 just to refresh your memory. I picked this up right around here, called it for a short, but I said it's probably going to retrace. Excuse me, that was yesterday. Right here, I picked up about 10:30 along in here. It said it's setting up for my red zone, but my red zone was way down here, but it was actually to go short, the trigger price. But with that, I was actually below the level that is my trend shift pivot zone. That when that happens, normally prior to alert, it's going to do a retracement and give a little Z pattern, and that's what it did. Today on the DIA, I saw the same setup. This morning, after it had sold off down into here, it had gone below my factor 50 trend shift pivot zone, but it had not signaled the short signal yet. And that was just before 12 o'clock. I've been watching it, and it would have had to gone way down into here to trigger that at that time. Now, as this Z pattern progresses, it raises the level. We're right in here, let's say red zone down here. After you get this Z pattern, it'll actually pivot the short alert back up 50 cents to maybe even $1 in this case, because we were on a 50 factor. I tweeted out right before noon this tweet you see right here. This went out at 11:54. You can see it over on Stock Twits at 11:54. Right here, same. This I actually put it on Stock Twits and sent it to Twitter. 11:54 a.m. is when I tweeted this. The DIA, if it bounces to 254.85 to 255.55 area, look for a possible reverse from that level. And I put even if it goes back there. And I put that as a bearish comment. Now it took that stock 2 hours to do what I predicted. And I missed it by 11 cents. It went to 254.74. It almost got there right here, 254.57, and I wasn't sure that might not be as far as it was going to go, and that it was going to come back down. I had my trigger level. Keep in mind, this is what I use on the daily and the weekly. That's a 50-period moving average and a 200. It don't have anything to do with what I'm talking about. This is the VWAP, though. That's kind of a key factor here as well. It helped confirm the trade to take it early. But when it got here and rejected the first time, it was giving me a level. I'm not sure exactly what it was at that time. And then it went back up here, and it went within 11 cents of the low end of what I predicted. I predicted about 85 cents to 255 quarter, and which 255 quarter puts you back up around the open price. Well, it rejected here, and then if you take, I like to say, if I'm going in a green zone or a red zone, I always say draw a trend line. Well, there's your trend line, and it triggered the green zone, the red zone, somewhere right along in here. And there's no way I can know we're going to get this big a sell-off, and I kind of expected it to go down to the 50. We had already got pretty close to the 50 on the SP 500. But using our alert system, that's what I had predicted was going to happen to the market. Now, like I said, no way I predict it's going this far. Now, we got through the 50-day on the S&P 500. That's not a good thing. So now that we're below the 50-day, that is now our resistance. The level today, 2736.05, so we'll adjust this up. I'll adjust this so I can see it if I pull the chart up. Plus I set an alert on it every day. If it goes back there in the morning and visits there, it'll be kind of like I mentioned yesterday. We open below it, we go and touch it, and we reject it. That's what you can probably expect tomorrow. We may actually open on the line and go straight down. We may gap into it. We may open down here on this pivot low and run back up and hit it and then reject it again. Till we get back over there, this market is not going back up. A lot of money came out of the market late this afternoon, right at the close. A lot of mutual funds, ETFs, pulling back on their position. So that's probably is going to imply that we're headed at least back down to this area, maybe all the way back to this trend line. This trend line here is not so significant that I drew on the chart. It was just a spot I picked to have something to gauge off of. But this line here is drawn on a weekly chart going way back. This is what counts. Now see, it'll cross over at some point over here. And I'll alert this again because I'm not sure if I've expired. I'll set it out a month from now, and I want to restart it every 15 minutes. When it hits it, I want it to reset every time. If it goes below it, comes back up to it, it's going to reject it from the bottom side. If it hits it and bounces off of it, it may go back there later on the same day. It may go back there later on 2 days later. So I want to keep re-alerting this line. This is the key thing. If we get down here, this is going to be key while we're trying to hold that area. It also could be a huge bounce when it gets there. You also see how this is kind of lining up with a 200 that's rising. So that's what we need to be watching on the markets. If you're a swing trader, I wouldn't want to be long. And if you've been using our premium alert service, you've had a really nice run up here. We had stocks that came in from the 9th to the 14th for multi-day swing trades. Yesterday I had a lot of stocks that flipped over toward the end of the day. Caterpillar was one of them. We had a great trade on that early this morning. And even some of our option guys got in on it. Yesterday, Caterpillar had gone into my red zone on a 50 factor, which is more of a swing trade, late in the day. So I had it on a short watch this morning, and it immediately, after this first 15 minutes of jerking around here, broke down, got a really nice trade off of it, and then it bounced, sold again, and then when the market collapsed, it of course continued on down. Now it did get to a support area, and it got through its 50-day today during early actually, and never did get back above it. But enough about the market. So let's look at what we got on the scan list. Your watch list here will allow you to pause and take a look at the stocks that are on the list, gone into the weekly bear zone. There's your weekly bull zone. This was back down today. Had the big gap up yesterday. We got a couple of extras came in today. There's your daily bears. It's the way this particular alert works. When we've had the market get so out of kilter, remember we're looking for a consolidation break, and so that may not be the case on a lot of these. And there's your daily bulls today. You can pause the video, take those lists and go work on your own charts, or you can hang around and we're going to do the chart by chart. We'll do the 3-minute tutorial for reminders of what all our lines stand for, and what we look at, and how we're looking down here at our true and false on our bull and bear zones. And we want you to be paying attention down here so you'll know if it's something that's re-alerting. We'd like you to pick up on it on the first alert. Do the tutorial, we'll get to the video. This is a mini tutorial on what the lines mean on my charts if you're a first-time viewer or been a while since you viewed. We're scanning on weekly and daily charts for my condition. When this green line is up, it's my bull zone, and when the red line is up, it's my bear zone. You need to be aware of support and resistance lines and what charts do at levels, and that's what these levels are for. Just quickly as I can do this, and we're going to put a video on YouTube getting more from your swing trading charts that'll be more detailed and look at more stocks, how they react to these lines. But the gist of what you see here is this is what I'm scanning for, and as you can see here, this showed up in the bear zone. It did go down for a few days, but these green lines are support, and that's why it fought for a few days, tried to bounce back up, headed back down again, came right back into the bull zone, bear zone, excuse me, and continued on down. Now the lines, here's what they represent. A green line is a place that a stock went up to and rejected. So as this green line redrew itself every time we made highs right here, and then it stayed across here for reference points, continues the same line here for reference points. Resistance, when you get above it, becomes support. This green line was drawn way back in the history, and when this stock broke above this resistance level, when it came back down, it held it, it held it, it held it, it tested it and held it again and again. That was support. That's why I want you to be aware of what these lines mean, and you'll see them on my charts. And then the activity that stocks do, sometimes they go, that's my first target, that's my second target. Many times stocks go target 1, pull back a little, target 2, then they may pull all the way back to 1 and go again if they're continuing an uptrend. In this case, it did the pull back. This blue line is a 50-period moving average. This orange line is a 200. So that's what I want you to be aware of as well. And then I have a pivot system that consists of this blue line at the top, yellow line at the bottom, and my target 1 and target 2. You'll see this particular day this stock gapped down, huge gap down, open way down here. The low on this stock was 169.68. I'm getting that right out of this box over here. And the value of that yellow line was 169.67. Within 1 cent, it held that line and bounced that day for a huge bounce. It's not a support level, but it's where I look for stocks to try to hold. It's where I look, if I'm short, say from here, this is where I'm looking to get out. I'm looking to move 2 levels, target 1, target 2, going up, target 1, target 2. The pink lines all represent places the stock has gone down to and bounced. This pink line is referencing this last pivot low. So as you're selling down into it, it may bounce again. If you get below it, then it becomes resistance. And that's all these lines mean. I just want you to know what they mean going forward. Thanks for watching the video. Let's get started. Through time, I've got several comments and emails from viewers that don't subscribe to our services but do watch our videos and basically say, hey man, I'm getting some good trades off your videos. I wish there's a way I could contribute, and I don't want to sign up for a membership. So I finally went and made a donation button. You can find it 2 places. On any video, we're included at the bottom. You just click the show more button, and shortly down there you'll see support our channel, a donation through PayPal. You can click right here, pay through or make a donation through PayPal. Any amount you want to put in there is acceptable and appreciated. And then on our website, you can go to daytradersetups.com, press the YouTube menu item. It'll take you to this page, and there's a donate button there as well. And we appreciate that, appreciate the suggestion, and thank you ahead of time for any donations sent. We appreciate it a lot. Okay, remember this is a weekly chart, and we got a lot of stocks on here. So I'm going to rapidly go down really fast as I can and let you get a look. Remember, I want you to look right here if we're coming in. This is the true for crossing this level on this chart. Puts it in the weekly bull bear zone in this case. The blue lines are your 50 week, orange lines your 200 week. The green lines are support and resistance. So this stock, for instance, is at a support level. It's broke down through 1 and retested it this week, and it's continuing down. You can stop these videos anytime you want. This is the level right here, the bear zone. Pause and take a look. The bear zone is where the line is drawn at. Okay, so this stock, the net change for the week is down 81 cents. It's down 65 cents below this trigger level. So it's probably triggered more than just today. This is a stock that's ran. These are my little target levels that I work from a lot of times, and this is something I've taught in videos. If you've been following my videos for long, you'll get something that goes down target 2, retraces back to target 1. I usually expect 2 movements. This is my upper pivot, the yellow line is my lower pivot, and I usually expect 2 levels. So here I got a rejection of my upper pivot, which I've taught many times in the past. Go back and revisit, sell off from that point, target 1, target 2, and then maybe you can get a bounce and go back up. In a case like this where it goes back up, gets back to target 1, it starts another trend down. Well, that's what this has done. This will be my target down here and back down to my lower pivot. Now, if you're one of our subscribers, I share charts through TradingView with you. You don't even have to have a real-time account. You can use them for free. And as long as you're a subscriber, I allow you to have my pivot system over there at no charge to help manage your swing trades. They work intraday if you had live data, but even on a 60-minute chart over there, you would have the lines that would be accurate without having live data. And we have these support and resistance lines as well over there pre-plotted on the chart you can use as well. And then if you're a subscriber, I'll help you set these lines up on your charts for support and resistance, not the targets but the green lines and the pink lines. Just a continuation here. You can see this has been down here before. This has been in a downtrend for a while. It's nothing new. I'm going to back up here. This is nothing new either. You can see way back here. BWA is kind of in a consolidation here. You got a support line back here. That would be in play where it's gone up to and resisted before. Old resistance. Now that you're above it, new support. Now this has been much, much higher than you see it now, of course. This is kind of, like I said, this is a consolidation period. This is multiple weeks here. So that's kind of the kind of setup you're looking for. And if you're going to swing trade, you want to swing trade on weekly charts, not daily charts. And you can be an active trader and trade multi-day trades. Day trading from these stocks that break out of consolidation can provide some good day trading watch list. But you can also get into a multi-day swing trade, but not a long-term swing trade. It could develop into a long-term. But just because it's on a shorter term time frame, for the long term, you need to be looking at weekly charts. These are all just back down into these bear zone areas. This has been a pretty long consolidation here. It's not a tight consolidation, so not as prevalent, I guess is the word. First time been in the bear zone in a long time, since way back here. I think that sector is under some pressure right now. I think it had a lot to do with the market today as well. Dish just continued. This is, this was a short way back here. You do got support lines coming down. And that's another thing about looking at some of these. You may find something you've been interested in for whatever reason, and you find that support line you might not have seen before that you think may be a good place that could hold, and that could be the case. FMC, I think, had earnings yesterday or day before. Lost this support level today on its weekly chart into the bear zone, and it's already been there a week or two ago. Now this triggered way up here, and now it's sideways, recalculates, and this is the new level it's crossing into now. This is my power band, just momentum indicator that I use, that I developed, and every time I give an alert, even if the price puts me into the bear zone, if the momentum's not there, I don't even put it on the chart. And so you can see as this went sideways for 3 weeks, the momentum was still in favor of the original trade, and now it's resuming. That's what the little yellow lines are about. And then the red line is just like on the daily. It's telling you that the high is now low enough to be in what I call my trend stability mode. If it's got a red dotted line on its lower line, it's not that overly strong yet. That don't mean it's going back up. Like you can see, whereas this went up, it got strong enough lows to be trend stability, and then it did it again as it worked its way along. again, just a 3 or 4 week chop here. Gonna try to speed it up again. You can pause anytime you want. This is kind of consolidation. First time it actually went into the bear zone down here after 3 weeks of sitting here, and also you got this long consolidation period sideways. So this is picking up momentum here. This will be your first support level, $50.95 on this green line. And you can see where last time it sold off, it got real close to that. That's why I call them support levels. So it crossed resistance, which became support. And now it's got to go back down there again. If it breaks down, it's going further. Once it gets below it, that becomes your resistance to come back up. This stock was already in the weekly bear zone. It's been sideways for a month, so less significance on this. That don't mean it don't break down more. It just means when you see this down at the bottom, it's already broke into the weekly bear zone. This is just continuation. It's not a new trade. J&J, kind of the same thing here. Really hasn't got going yet. Sideways for a month here on Mickey D. Not really a great consolidation. So kind of like a false alert. If you don't got consolidation, is what we're looking for here. Same thing here, just sold off sideways, can't get back through the 50 week. Now this is not consolidation, but it's pretty interesting that it's breaking this little support level here. It's probably headed to the next level down. Which is a pretty good little move. Again, another stock that this stock gapped down a couple days ago on your daily below support, and this is another support line. It's below that. It's below the 200 week. This is going to be your resistance right here to get this back up. 32.05. Consolidated for a month sideways, now breaking down further into the, actually first time in the bear zone. Now when we say consolidation, this is a little bitty consolidation. This is not what we're trying to break out of. This is like a multi-day consolidation. It's been here for 4 weeks, but it's not what I call consolidation on a weekly chart, because you're going back into all this area. It is momentum to the downside. Now, this kind of has a pretty good trend of consolidation. It's not classically what I'm looking for. I try to throw it out there if I really like it. They had a gap down on this stock as well. I think they had earnings 2 days ago. And on a 2-day chart, you got some consolidation here that you were breaking out of, and you got this little support line going back on your weekly. You got this area back in here was kind of support, and it's threatening to break on through there. So we're probably headed further down here, especially with the market not helping it. Another stock. Now this is pretty good consolidation, but it's been in a downtrend for quite a while. But it hadn't really sold off that hard. Another stock, it's down here at a support area where it has held before. Not really consolidation. Needs to hold here though. And TEX, not consolidation either. So nothing really great there to jump off into. Your weekly bulls, you had Dillard's gap up yesterday morning, had a red day today, back down below this resistance line. This thing could actually pull back, especially with the market like it is. It may just pull back to somewhere down into this area, or maybe back even as far as this. This would be your more predominant support area if it does get into a sell-off. And that's on the daily chart we're looking at there. Weekly is where the bull started 2 days ago. This was on there yesterday. Had another green day. This stock don't care what the market's doing. Another weekly breakout. Not really consolidation. Big monster candle today though. What an engulfing candle that is in a down market day. This would be a stock to maybe pay attention to tomorrow. And this stock moved into the bull zone today, a big day it had as well. Here's your daily. Gapped up this morning above a support resistance line. Got pretty close to testing it, went on up and made some new highs. A big move there. I don't know if it was news driven or maybe even had earnings. That's the weeklies. We'll get to the dailies and then look at the recaps. While you're here, be sure to subscribe to our channel and follow us on Twitter or StockTwits at Daytrader Setups. And our website is daytradersetups.com and swingtradersetups.com. Don't forget this video is being brought to you by our premium alerts at swingtradersetups.com. They're real-time alerts. They're posted on our website, and we're looking at our bull zone weekly and daily breakouts and our bear zone weekly and daily breakouts that are in one category on the website. And there are other categories that are more aggressive for the more active trader as well. And by having a subscription to that service, you get all these alerts intraday as they happen, and one subscription gets you access to everything, as well as our chart system. If you would like to get it, I can set you up a couple of different ways to have the green and pink lines available for your charts as you review. Let's go forward. Not many to look at on the dailies. We got a gap down here on ACAD. That was off of earnings. Here's a support level that it failed, and another one right below that. Probably goes lower. ALB, I believe that was also earnings maybe. Broke down through support into the bear zone, and this is kind of a consolidation break of this area down in here for the last several weeks. Just coming into the bear zone for the first time. Also about to hit the weekly bear zone. And one of the things we do have on this that's not on our website, we actually run this scan on 5,000 symbols that I share with you in this video. We only monitor 400 stocks on our website, and that's more than you'll ever need to find plenty of trades. You can't watch them all. We have a filter system. We suggest people filter their stocks down based on some reports we have and their desires and price levels and tolerance levels, and just watch a handful of stocks. You can't monitor and trade 400 stocks. I only watch about 20. I have a list of about 35 stocks that I'm scanning every day that are, I know their personalities. I'm day trading them. You are breaking this whole consolidation level up here. Again, this is energy related. You do got a support line right here. But you can't watch that many stocks. I try to stick to the 400 list. Their ATR match to the factors that we scan off of and send alerts out on. They're not just jump in and you got a short right here and it's not going to go back up. That's not what they do. Sometimes I can predict what they do based like I did on the DIA today. That look like it's going to do a Z pattern. We have a pattern recognition we try to put in with the alerts if the Z pattern's already occurred or if it is trying to occur. We have trend lines. We try to automate those with the green and red zone alerts. And then our retracement is probably our strongest because I'm on the bulls now. You're already in an uptrend or a downtrend, and then you get the retracement, and we got a level that we watch. It goes back and maintains that level, and the integrity of the trade stays intact. We don't just say, hey, go short right here again. We wait for at a minimum of a 2-factor reversal. So if it's on a 50 factor, we're going to wait that stock reverses over $1 before we clear it to rejoin the short. And I'll day trade off those same kinds, but I'll run them on smaller factors like on 25s. And like Nvidia today, it ran, and Caterpillar too. Nvidia, when it got started going down, every time it bounced $1, $1.50, it went right back to our level. Retracement alert, down again it would go, and vice versa. And Caterpillar did that as well today. It was on a 50 short from yesterday, but every time it tried to bounce using a 25 factor, it retraced. It gave the retracement alert to go back down. It bounced $1, $1.50. It gave the retracement alert to continue the bigger trend, which was on the 50 to the downside. We actually have the 25, even though you could never watch the 25s and see all stocks coming through there and be able to figure out how to trade or what to trade. You just overthink everything. You don't need to do that. Need to get zoned in on a smaller list of stocks, but the point I was making with it, we run the 25 on all 400 symbols, is if you're in one, you're in a 50 factor downtrend, and every time it bounces, maybe you got out of your short, you're on a multi-day short or overnight short, it's bouncing, you want to get out, protect your profits, but you want to re-enter. It's a lot easier to get back in a trade than it is to find a new one that you know is already working if you just know where to get back in it at. So you can take that stock that you're already short, like Caterpillar, you can go over to our filter on our 25s and say, okay, when it says it's going back down, that's when I want to make sure I'm paying attention to my 50 factor on my Caterpillar or whatever stock. You can put the symbol in or a group of 5 or 6 symbols of stuff you're watching and zone in on the stocks you chose to pay attention to. And that's how you make money day trading or multi-day trading, is to stay focused on something you've already made a determination. If it does this, I want to do that, and then you go around and do something else and you come back only to see you missed the trade you already figured out. That's all I got. We're going to do the recap real quick here at the end. Thanks for watching. Subscribe to our channel. Good luck with your trading. Come over and check out our website. $69 a month. All you got to do is get in one trade 30 cents early on 200 shares once a month, and you've got your money. You made back the $69 that you paid. Come see us, check us out. Day Trader Setups, SwingTraderSetups.com. Going to do the bulls first on the recap. Remember, the only reason we show this page is so you can pause the video, see the stocks that are on these lists. These go back 5 days, and you can review what you've been watching from the previous day's videos. This is this week's current. This is today, yesterday, day before, day before, day before. Goes back 5 days. Remember, the yellow line indicates the momentum is still there, even if the check mark's not still there, which means we're staying in the newly calculated bull zone in this case. This stock here, for instance, broke out yesterday, but it pulled back. It's below the current bull zone level. That don't mean it doesn't go back up, but it also lost the momentum factor. The yellow line's gone. It hadn't come down far enough to break out of the trend stability that it got into yesterday, so it's still can definitely go on back up after today, but it's not the strongest of the group here. And then you go back here, you can see that you still got this stock, for instance, is still well up here. It's maintaining the momentum, which is your yellow bar. It's still in the bull zone, the newly calculated bull zone, because remember, it went in a bull zone way down here. So there was a line way down here at the time this broke up there 3 days ago. It's recalculating itself as it goes. It's maintaining the newly calculated level is what this little check mark means. It means you still got a super strong stock. You did get the resistance right here on this one. These others are just kind of based here today. They're still maintaining this momentum, not maintaining the bull, and dropped a little lower than I like to see it drop. The green line's gone. That's what these are about. MU, here you go, still nice strong stock, still maintaining bull zone all the way. Got the check mark, still got the green marks, got the yellow marks, PANW as well. Of course, it gapped up, so it's going to have a harder time staying up here. That don't mean it don't keep going up. It's holding it so far. That's all this is for, to you to pause and look at that and recap what you're seeing. Let's let you look at the bears. You don't have a lot to look at the last couple of days on the bears, but these are the ones that came up earlier in the week. This still came up yesterday's, maintaining itself. It's now down $2.81 from where we triggered this into the bear zone. And this P&L, by the way, it keeps the original bear zone, not the new one, the original bear zone level where the trigger took place day one for 5 days, and it keeps recalculating the profit based on that level where it's at. And then out here, like this one, for instance, 4th day in, 65-cent profit from where it triggered at. Now this stock has bounced some the last few days. At the low, it was $4.25 profit from that trigger price, and that maintains this column all the way out here to the last day that we followed. 5 days total, the current day and 4 days after. Thanks for watching the video. We'll be looking for you tomorrow.